Prime Minister Narendra Modi recently appealed to Indians to avoid buying gold for a year, but we know the place gold holds in our country. It is not just an ornament, it is an inheritance, a status symbol, and a kind of savings. So why would our government ask us to refrain from buying something so valuable to Indian households? The key is in looking at the story data tells us about India's relationship with the yellow metal, meaning by the end of this video, you will have answers. But first, where are these numbers from? Data on the global gold demand and supply is compiled by the World Gold Council, and statistics on the imports and exports of gold are compiled by the Ministry of Commerce and Industry in India. As for where you can access clean, standardized, structured and ready-to-use datasets related to gold imports and exports, demand and supply, they are all available on dataful.in. And now, it's time to begin the data deep dive. India's quarterly gold demand has always moved with the calendar. Purchases rise around festivals, weddings and other buying seasons, which is why Q3 and Q4 consistently report higher volumes than Q1 and Q2. But apart from this seasonal trend, the data also points to a gradual rise in the overall baseline of demand. In 2010, quarterly demand mostly stayed near the 1000 to 1100 ton range. By the late 2010s and early 2020s, several quarters were crossing 1,200 tons, with Q3 repeatedly emerging as the strongest period. The highest figures appear in 2025, where both Q3 and Q4 stand above all previous years. The pattern also reveals how resilient gold consumption has remained despite economic shocks. Even during weaker phases like 2020, demand recovered quickly in subsequent quarters. Rather than disappearing, purchases appear deferred and then compressed into later festive or wedding cycles. India's dependence on imported precious metals has expanded sharply over the past 8 years, with gold imports in particular reaching record highs. Trade data shows that the value of gold imports more than doubled from 2.17 lakh crore in 2017-18 to 4.89 lakh crore in 2024-25. Gold imports dipped in 2019-20 during slowing economic conditions and then surged after the pandemic. By 2021-22, imports had crossed 3.4 lakh crore rupees before rising further to nearly 4.9 lakh crore rupees in 2024-25. The scale of the increase is economically significant because India imports nearly all of the gold it consumes. Unlike industrial imports, where the imported raw material is turned into finished goods that can be exported and sold, a substantial share of gold imports enters household savings, jewelry markets and informal wealth storage and often doesn't go back into the market. Compared to gold, silver imports followed a far more volatile path. Imports collapsed to 5,960 crore rupees during the pandemic year of 2020-21 before rebounding dramatically over the next 3 years. By 2023-24, silver imports had risen to over 45,000 crore rupees. Combined gold and silver imports crossed 5.3 lakh crore rupees in 2024-25. This makes precious metals one of India's largest import categories after crude oil and electronics. The broader macroeconomic concern is straightforward. India earns foreign exchange primarily through exports and capital inflows, but large commodity imports increase pressure on the trade balance. But there's a striking contradiction at play here. While policymakers are urging households to reduce gold purchases in order to conserve foreign exchange, the Reserve Bank of India itself has steadily expanded its gold reserves and increasingly shifted those reserves back into domestic vaults. However, the distinction lies in the economic role gold plays for the state versus households. RBI data shows that India's official gold holdings have risen sharply over the past 2 decades. Total gold deposits with the RBI increased from 357 tons in September 2003 to 880 tons by March 2026. More importantly, the composition and location of these holdings have changed significantly in recent years. The data reveals 2 simultaneous shifts. First, the RBI has steadily increased the total quantity of gold held as part of India's reserve assets. Second, a growing share of that gold is now being stored domestically rather than overseas with the Bank of England and the Bank for International Settlements. In September 2020, India had more gold abroad than domestically, with 366.9 tons abroad and 292.3 tons domestically. By March 2026, that pattern had reversed dramatically. Domestic holdings rose to 680.05 tons, while overseas holdings fell to 197.67 tons. This marks one of the largest shifts in the geographical composition of India's gold reserves in recent decades. After years of geopolitical instability, sanctions risks, currency volatility and concerns around dollar dependence, central banks across the world have increasingly treated gold as a strategic reserve asset. Gold provides diversification against fluctuations in reserve currencies like the US dollar and euro, while also functioning as a hedge during periods of global financial stress. In essence, gold sits at the center of India's economic contradictions. While it holds a place of pride in households as an investment, for the broader economy, rising gold imports increase pressure on the trade deficit, foreign exchange reserves, and the rupee, because India imports nearly all of the gold it consumes. With that, we come to the end of this week's Data Deep Dive. Head to the comments to let us know what you think of these numbers and to share stories of the role gold plays in your family. And do like and share this video and follow Dataful on all these platforms for more such data-driven, informative content. Subscribe to a Dataful plan today and get access to our vast collection of cleaned, ready-to-use datasets across sectors.